Hello everyone, welcome to my channel. My name is Benjamin. For those of you who know me, I'm the Buffett investor. Right, so today in today's video, I would like to share, because people have actually asked me, say, Benjamin, how can I actually invest in the stock market, when I don't have like hundreds of thousands and things like that. So, the advice that I would like to actually give to everyone is that, it always it always has to start off somewhere, right? It always start off small, right? So in the market, when we are investing, there are actually many, I'll say investment products that we can actually leverage on to invest our money in the stock market. In fact, when I began my journey, I was recalling years back, right, is that I also didn't have like, hundreds of thousands, but what I did was, of course, you know, um, uh, compared to some of what some other people might actually suggest that, oh, you can just use $100 and buy, one stock, but from the way, our advice is that I would still pretty much prefer that you actually save up your money first, right? Because we also want to keep our commission fees, when you look at a percentage point, right, how much of your commission fees versus the amount of money you're putting into your investment. I would still prefer if it's below, at least, below 0.5%. So it's really very low. You want to keep your commissions low, and I'll touch on that later. Right, but firstly, what are some of the investment vehicles that we can actually choose to go into entering into the market, right? So one, I think what I always like to stress is always, and also this is recommended by Warren Buffett, is going using especially what do you call that, exchange traded funds, ETFs, right? And if you actually Google, like example like Vanguard and things like that, even you Google online, you probably be able to find there's couple of hundreds of I would say commission free ETFs that you can touch on. And ETFs is one of the best efficient fast free ways to using your limited pot of money to divest straight away into what do you call that, into diversified portfolio, right? So, and essentially, if you think about it, let's say if it's the S&P 500, you're talking about like 500 securities that makes up this particular ETF. Or for some of you, you might want to go into the total market ETF as well. So that's even more diversified, right? So that's one way. Some that you can consider will be example like the iShare. I think the core S&P 500 ETF that I shared, and also the iCore Nasdaq 100 ETF also. So these two iShare ETFs, they are all being what do you call that, listed on the London Stock Exchange. So I need to say that they are actually Ireland domicile, right? And that also gives you some savings in terms of the dividends holding tax. Okay, and if you actually go and check, I think in terms of their commission fees is actually very low. We always try to keep it, as I was saying earlier on, try to keep it below. So I believe for the S&P 500 one, it's only like 0.07%. So that's even less than 0.1. So, and that is the beauty, really the beauty of it, that one thing I to say that if your funds are already limited, all the more every saving counts, and we should actually try to lower down the commission fees. And that is why I really I personally, I do not want to go for those like things like mutual funds, or even like unit trust, or other investment vehicles where the commission transaction fees are very high, right? Okay, and going on is that talking about how should you actually discipline yourself, or how should you set up a system, is that instead of waiting for every $100, perhaps you might want to save up, let's say over a period of time, every 6 months or every 1 year. Once you have put together like $1,000 or 10,000, depending on your comfortable level, right? Then you can actually enter into the stock market, and more importantly is to actually invest consistently over time and time again, right? Because sharing is that all of us, we are not fortune tellers. Even myself, we cannot predict the market, and it's never, you can't really estimate when's the market going to crash. I think 2 or 3 years ago, all of us, the analysts and all the business times, they're all talking about the market going to crash, but it actually took even a couple of years, and even then the market haven't really like crashed down to like the levels of like 2007 and things like that. So it's always good to just continue to invest regularly, right? And I think to share again, just to summarize, just again, is that for us, always start small. It doesn't matter, you don't have to invest like hundreds of thousands, but you can always, I think most importantly is to be disciplined, and to consistently invest into the market. But of course, for those of you who, if you don't feel comfortable, or you don't have the time to go and like, do stock selection, speaking, then I think one good way is really to invest in using index ETFs, right? So you can either go into any brokerage, and I think I've shared a few just now. You can go either to Interactive Broker or even to TD Ambridge Trades, right? And you can actually find a list of actually commission-free ETFs. That's one way. Or another way is actually you can, for some of you, if you want automated kind of investing, then you can tap onto like those robo advisors, right? So you can actually go and read. I think you can Google online. There's look through some of the ways how they are investing methodologies, right? But I would still suggest go for the one that actually has also the lowest commission fees, right? And so actually with these two options, you are able to actually invest. I would say. With a pretty decent investment fund. So I hope in today's video you have learned something useful, and stay tuned for the next one. I'll see you soon.